Welcome to BX Insights, where curiosity meets inspiration. Today we have an interesting insight into the term, Federal Reserve Bank. It can be a bit misleading due to its name. While it may sound like a government agency with reserves and banking functions, the reality is a bit more nuanced. Here's an explanation of why the Federal Reserve is not quite Federal Reserve or a traditional bank. The term, Federal Reserve Bank, carries connotations that might not align precisely with the institution's actual structure and functions. Delving deeper, we find that the Federal Reserve is an intricate entity that encompasses more than meets the eye. Is the Federal Reserve truly federal? While the term may imply government ownership and control, the Federal Reserve operates as a decentralized entity with both public and private components. Created by an act of Congress in 1913, its structure incorporates the Federal Reserve Board, the Federal Open Market Committee, FOMC, and individual regional Federal Reserve Banks. This multi-tiered structure grants the Federal Reserve a degree of independence, enabling it to execute its monetary policy objectives while also fostering cooperation with the government. Does reserve equate to the same concept in traditional banking? The notion of reserves often relates to assets that banks maintain to meet obligations. However, the Federal Reserve's concept of reserves diverges. In the context of the Federal Reserve, reserves refer to funds that commercial banks are required to hold in their accounts at the Federal Reserve. These reserves are essential for maintaining the stability of the financial system, ensuring banks can fulfill their obligations and facilitate transactions. Does the Federal Reserve operate like a conventional bank? While it's commonly referred to as a bank, the Federal Reserve's functions transcend traditional banking activities. It doesn't hold personal accounts, make loans, or engage in retail banking services. Instead, it serves as the banker's bank, providing financial services to commercial banks and fostering the stability of the financial system. So, what exactly are the Federal Reserve's roles? Among its key functions are monetary policy, regulation and supervision of banks, and payment system oversight. Through monetary policy, the Federal Reserve influences economic growth, employment, and inflation by controlling the money supply and interest rates. Its regulatory and supervisory roles aim to ensure the soundness of banks and the broader financial system. Additionally, the Federal Reserve maintains the efficiency of payment and settlement systems, underpinning the seamless flow of transactions. So, the Federal Reserve Bank represents an intricate and multifaceted institution that surpasses the conventional interpretation of its name. While not entirely federal, not entirely a traditional reserve holder, and not a typical bank, the Federal Reserve plays a pivotal role in the U.S. financial landscape, shaping economic policies and safeguarding the stability of the financial system. Thank you for watching. Don't forget to like, share, and subscribe. Until next time, stay curious, stay inspired.